So we've been discussing about the best AI ETFs that are available to invest so that you can play in the AI theme and be part of the AI story, which is expected to grow multifold in the next few years. So we had already looked at multiple ETFs. So here are some of the pending ones. So the next one we are looking for is ROBT. So first is Nasdaq AI and Robotics ETF. So it actually combines AI and robotics as well within one single portfolio. So it is highly diversified. So what it does is it tracks a Nasdaq index with quality screens. So it also includes mid cap players along with large caps. So this is extremely diversified. It can give you a lot of return potential, disruptive growth if some of these mid caps perform really well. So it is basically designed to capture both automation as well as intelligence. So you have exposure towards the robotics theme as well as the AI theme. So this provides you a thematic exposure, and it balances industrial stocks as well as digital intelligence. So it provides you an opportunity to focus on industrials, robotics, manufacturing, retail, etc. And digital software is also there as part of their portfolio. So this is a smart beta strategy. It combines AI and robotics. So there is a good amount of mid cap exposure, which is extremely crucial to provide you that additional alpha. So in terms of negatives, so smart beta factor could deviate from pure AI trends. So fees slightly higher than passive peers. So robo heavy exposure can dilute upside from software. If AI software kicks in and has a bull run, then you may miss out on phenomenal return. So the fund house is First Trust. So they already have good AUM, $493 million. So the eighth impurity is very low. So this is one of the lowest among the companies we are researching. So 3 out of 5. So it is a passive fund. Robotics focuses on Nasdaq A index. So they directly invest there. This is a passive fund. So launched way back in 2018. So there is a lot of history, a lot of performance data that is available. Let's look at them. So beta is good, better than the category average. Sharp ratios very low at 0.03, whereas the category average is better. Alpha is again in the negative. Standard deviation is low when compared to the category. So trainer ratio is also negative. Expense ratios very high. So overall, be it performance, risk, benchmark, none of them look improved. So 66% exposure towards US. So there is a lot of diversification across the globe, which is a good thing. And in terms of holdings, you have a lot of interesting companies across the AI and robotics space. So Arrow, Vironment, Abstract Holdings, Symbiotic, Umbrella, lots of these companies are there. So this is not a pure AI play. This is more of a robotics plus some investment in AI. So let's look at the returns. 1 year return, 14.3%. So better than the segment average, 11.7. So 7.26% in 3 years. Only 5.5 is the segment average. So 6.7% in 5 years. So overall, the returns are not very impressive in a long term, whereas the last 1 year return gives some solace. So let's look at a couple of indexes. So the first one is Solactive Generative Index. So this is a pure play on GenAI infra and application. You can directly invest in this index. So includes models, chips. So end to end it serves. So foundational layer models, chips, as well as software. So it is primarily built for a high thematic exposure to tech. So it is likely to be very volatile, and at the same time, high upside potential is there if generative AI as an industry does really well. So this is the best index for investing for aggressive investors. If you have strong tech conviction, you can consider investing here. So the index is still relatively new and niche. So in terms of pros, this is a pure play Gen AI exposure. If you believe in the generative AI story, this ETF could be a very good option. So there is very high thematic clarity for advanced AI themes. So they are pushing for high upside in terms of Gen AI trends. If it clicks, it can give you phenomenal returns. That is very much possible. So in terms of negative, there is a very high volatility because this is pure generative AI focus. So high risk, very high reward ETF this is. So this is a new one, and the track record is not available. So smaller AUM. So the next one is Bloomberg AI value chain index. So it basically tracks companies across the entire AI value chain. So it includes data, compute, models, and deployment layers. So it is specifically designed for broad-based institutional grade AI exposure. So it's a different, methodology with a balanced sector allocation. So a value chain index is something you can consider as it serves as the foundation for many of these AI ETFs. So they invest in this index and they remain a passive fund. For example, FAI is a passive ETF focused on investing in Bloomberg AI value chain index. So this can be a good benchmark for a long-term AI investing ecosystem. So it is comprehensive and broad-based. It is balanced as well. So it is not directly investable. You have to go via ETFs. So this is a broad index. It may dilute some of the high conviction picks. So it is passive and it is slow to react to emerging trends. Overall, this is the ETF summary we have been seeing over the last three videos. So these are the top ETFs, right from BOST, WISE, Robo to ROBT. There are so many options that are available. You can look at the expense ratio in all our videos. We have spoken about the risks, performance, as well as the AUM and the theme purity. Hope this video is really helpful. If you like this, hit the subscribe button, hit the like button, share it with your friends. And in India, we have Myriasat, which is the only available ETF. Now let's see how to play this theme. So AI ETFs are not all the same. So there are company ETFs that are focused on hardware, and then there are some ETFs that are focused on data, AI hardware, software, etc. So every ETF has a specific purpose within AI, and there are some ETFs that are basically balanced, investing across all these aspects. So you can choose funds that align with your conviction. If you believe in the generative AI story, go for it. If you believe in robotics, go for it. So if you want a balanced fund to play the theme, again, there are options we have mentioned. So some ETFs are passive, some are active. You can choose the funds you want to invest. So do not chase hype. Just because a fund has the AI name within it, do not go for it. It does not guarantee quality return. So what you have to do is focus on doing research and identifying the right companies. So these videos, which are part of the series, would actually help you to get there. So A is a theme that is expected to work out. It may or may not work out in the long run. So diversification is extremely critical. So have some diversification within AI. So start with your thesis. If you are bullish on generative AI, go for it. If you are bullish on enterprise AI or robotics, focus on ETFs related to it. So just look beyond returns. So understand what the ETF actually wants and how it fits your current portfolio. So consider blending software plus hardware. So what I would recommend. So be long term oriented. So this is a thematic fund, high risk. You cannot try to play this for 1 year or 2 years. So this is at least a 5 year theme. So multi-decade theme is what I would say, but minimum 5 to 10 years is what this theme is going to play out. So you can invest for long term. So use ETFs as tools, not shortcuts. So AI evolvement is just the beginning. So we have seen a few ETFs here. 15 ETFs have been researched and shown in these videos, but we'll keep seeing a lot of new ETFs coming out. So old ones may get restructured. So do not just buy and forget in this theme. So keep revisiting your thesis after every 6 to 12 months and see if the company or the ETF is going as per track. So even ETFs cannot guarantee real easy profits. So it is not guaranteed success. So you should understand why you are buying it and how it fits your portfolio. So do not outsource your conviction. So use these videos to take a decision, but do your own research and come to a conclusion. Get your own conviction in ETFs when it comes to AI. Do not use borrowed ideas to invest. So avoid fear of missing out. maybe these companies are overvalued, maybe there is an opportunity for a correction. So don't invest lump sum at this point of time because the market has already gone up with the AI story. So maybe SIP is a good option. No one-time investment right now when the valuations are high. So what do you want me to do? Do you want me to do a follow-up deep dive on which AI ETFs I would personally choose and why? If so, please post it in the comment section. If you have any other questions, post it again. If you like this video, please subscribe to our channel. That is what will help us to provide more quality videos and more quality content. Let's grow our wealth together. Let's be doing this together. As we keep posting videos, we'll get more high quality content, a lot of information which will help you to create wealth and improve your financial future. Thanks a lot for watching. Bye.